Good afternoon. This is the Chorus Call conference operator. Welcome and thank you for joining the Acea 9M 2015 results conference call. As a reminder, all participants are in listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and 0 on their telephone. At this time, I would like to turn the conference over to Ms. Ira Angrisani, Institutional Investor Relations Director of Acea. Please go ahead, madam.
Good afternoon to all of you, and thank you for taking part in the conference call for the presentation of the Acea 9M 2015 results. Alberto Iraci, CEO of the company, will now disclose the results. Then there will be a Q&A session. Please, Alberto, go on.
Good evening, everyone. I'm pleased to present the positive set of results for this first 9 months of 2015, in line with our expectation. Once again, they bear out our firm commitment to operational efficiency across all business area and corporative activity, which we believe is a key driver for the company growth. Going to the figures, EBITDA is up 5% to 531 million. EBIT is up by around 4% to 285. We have achieved earnings growth across all business area and above all in the water and energy segments. Net profit of 137 million is up by around 21% on the same period of last year. Investment of 285 has increased by 30%. More than 85% of the total capex refers to regulated activities with positive impact on RAB evolution and therefore on business profitability. And despite this high level of capex and seasonal factors, net debt is only slightly up on 31st December 2014 at 2.1 billion. Slide 3 takes a closer look at EBITDA, as I mentioned. Has grown as a result of the progress made in operational efficiency and the contribution from all business areas, which I'll describe in great detail in the following slides. 77% of EBITDA is generated by regulated activities. Let's now take a look at EBITDA by operating segment. The environment segment has contributed for 40 million, up 1.5% on the first 9 months of 2014. The performance reflects the shutdown of the Kiklos plant since July 2014, and positive contribution from Acea and Acea, the latter thanks to the greater amount of electricity sold by the San Vittore plant. We have invested approximately 50 million in this segment, including 7 million in the revamp of Orvieto waste treatment plant, which has been completed. This has involved the construction of a new composting plant with anaerobic digestion of the organic fraction of recycled waste to produce biogas. The new plant, has an installed capacity of 1 megawatt and capacity of 60,000 tons of waste per year. The plant is just starting to operate. Referring to San Vittore waste-to-energy plant, the other main our capex program, the progress of construction of the new line, with an installed capacity of 12.5 megawatt and capacity to handle 100 tons of RDF per year, is on schedule, and the line is expected to start up operation at the end of 2016 in accordance with the business plan. EBITDA in the energy segment is up by over 20% to 78 million, thanks to an improvement of margin on sale, totally 52 million. The energy margin is up in both the free and enhanced protected market, the latter due to the price rises applied to customer as a result of the increase granted by the regulator. The This increase is partially offset by reduced contribution from production, which is equal to 26 million, reflecting price trends and a slight decline in the volume of energy produced by the group hydroelectrical plant. Investment in the energy segment has increased also by 30%. Going on to examine the performance of the water business, despite a tariff increase of 9%, the positive impact on revenues in this year is roughly 3%, while the segment EBITDA has risen by almost 5% due to the efficiency improvement. This result also reflects the improved performance of company consolidated using the equity method. This positive factor has more than offset the negative impact of recognition in the previous year of non-recurring incomes resulting from adjustment in tariff of ATO 2. We have invested approximately 128 million in this business. EBITDA from Greece segment is up to 188 million, above all thanks to the improvement recorded by Acea Distribuzione, which has benefited from operational efficiency. CapEx in these segments amount to 102 million. The launch of Acea Distribuzione Workforce Management System is scheduled for next April 2016, while the new billing system will be introduced in July of the same year. The parent company reports a negative EBITDA of 0.4 million and total CapEx around 8 million. I would like to underline that investment in project Acea 2.0 amounts to approximately 17 million in the 9 months of 2015, of which more than 40 million related to regulated business with positive impact on RAB evolution. Slide 8 shows EBIT up 4% and net profit, which has risen by around 21%. We have seen a rise in depreciation linked primarily to increased CapEx. The tax rate of approximately 35% is down on the 41% of last year. As I noted in previous quarters, the reduction in tax expense reflects the positive impact of the elimination of the Robin Hood tax and the impact of IRAP of the deducibility of the cost of staff hired on permanent contracts. Slide 9 shows an analysis of the cash flow trend in 2015. There was a cash outflow of only 42 million in the third quarter of the year, despite large-scale investment, 285 million, being 30% up on the first 9 months of last year. I should like to reiterate our firm ongoing commitment to keeping the working capital in check, in part through improvement to the billing processes. Going to the net debt, then the steps taken have enabled us to limit the increase in net debt to around 42 million compared with the end of 2014. This is lower than the increase of 163 registered in the first 9 months of last year. Net debt is moreover 281, down on the figure of the same period of last year. The group debt is mainly long-term in nature, which an average term of maturity is just over 7 years. 71% is fixed rate at a global average cost of 3.3%. I have concluded the disclosure of the 9 months result, and I would like to show you the last slide in order to explain the project Acea 2.0, of which I am very proud. We are processing the project, which aims to lead to a major transformation of our company by introducing a customer-centric business model, adopting industry-leading technology and IT solution, and revisiting our corporate culture and the way our people work. The main area of focus are a new model of customer relationship management and meter-to-cash and workforce management system, all perfectly integrated. We are fully on track with this implementation. Therefore, we delivered the targeted efficiency estimated in approximately 70 million over the period of the plan up to 2019. On September 28th of this year, we successfully completed the first go-live of the project Acea 2.0 at water company Acea Prato 2. This involved the replacement of 19 existing system applications of software and hardware solution and meter reading, billing, including the billing, and the system related to maintenance and operational process. And I would like to underline that all these took place without any downtime and while continuing to bill customer as normal with no impact on working capital. And let me say that it's rare in such project, and especially when are so wide and have so big impact. The first slide shows Prato 2 new application map in operation since the end of September. That means that our efficiency planned in 2016 will be reachable and on which we are so focused. We will see in the next future to implement the project also in all the group's water companies, Acea Distrizione, Acea Public Lighting, and Acea Energia. Acea Distrizione is foreseen for next April 2016, which will change the process in a workforce management perspective as well. And we expect to roll out the new solution for billing in electricity, hopefully like we did for water, with no impact on working capital, as well in our electricity companies. And on that we are very focused and strongly working as company.
We have concluded our presentation and we are available for a Q&A section.
Excuse me, this is the Chorus Call conference operator. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. To remove yourself from the question queue, please press star and two. We kindly ask to use handsets when asking questions. Anyone who has a question may press star and one at this time. The first question is from Javier Suarez of Mediobanca. Please go ahead.
Hi, good evening to everyone. Three questions on my side. The first one is on the political side, and excuse me for the question because I know that this is not in your hands. But the question for you is how do you see the situation at the City Hall of Rome, either or not affecting your day-to-day operations, either on the negative or the positive side? I'm just curious and interested to know the possible effect that this could have on Acea. That is the first question. The second question is on the recent consultation paper that the Italian energy regulator has put out on the WACC for regulated activities. I would like to hear your views on this document and your interpretation on the document and the point of discussion that you could have with the regulator. And also related to that, when do you expect the publication of the second consultation document for the water business and your expectations there? And the third and final question is on the numbers. Can you elaborate for us this negative change in working capital for 32 million euros that we have seen by end September to where there should be by the year end on a full year basis? Many thanks.
Okay. On the political side, let me say that I see probably no effect because, to be honest, the previous administration did respect the autonomy of the management and of the company. So we didn't have any negative effect, and I can suppose that this approach will continue in the next months with the extraordinary administration in the municipality of Rome. And in any case, I can underline that the commercial relationship with the municipality of Rome are in a good stage as for us, because just to give you some figure, with the third quarter, we have credit through the municipality of Rome for around 180 million, and debt toward the municipality for 170 million. So we have only 10 million of difference between credit and debt with the municipality at this quarter. So I don't see any effect on our ongoing activity, and we will see. Maybe there will be an opportunity, because maybe some project that did not start with the old administration maybe can have a push with the extraordinary administration, especially if they will receive money and finance from the national government. About the recent consultation paper, to stay at a high level, let me say that I personally think that the authority can make more steps in the direction forward, in the direction of fixing a methodology that has more predictability in order to some aspects that are included in the recent paper, especially in determining the risk-free rate that is determined in some way basing the assumption of a determination of the authority. I would like and I would prefer that the authority would choose a methodology based on a long-run averages of government bond yields in order to be predictable in the future. So also in the cost of debt, which has been determined in a way that does not appear enough clear in my view, especially in the part in which they evaluate the spread for debt for the bond issued by company in a double A area with the one in Italy. The CRP, they denominated this value in as a CRP, is not clear how it's been determined, and I believe that also behind the figures, it is important that the authority come up with a methodology which is perfectly clear to everybody and predictable. The third question?
The third question refers to the trend of working capital.
Yeah, I'll be there in a minute. No, the last consultation, the next consultation paper for water is expected by the end of this month, in November, and in the informal contact, they confirmed that they should come up with regulation by the end of the year also for water. The last question is
returning to your last question about working capital, if you see page 9, you can see that in 2014 we had a change in net working capital equal to 76 million euro, and we foresee a level for this year substantially in line with that results.
Okay, many thanks.
Okay, thank you.
The next question is from Enrico Bartoli of MainFirst. Please go ahead.
Hi, good evening. A few questions on my side. First of all, on the consolidation, local utilities, On the government attitude, actually the Prime Minister said in the previous months that some additional action would be taken by the government. It seems that probably in the stability law there is nothing new. What can you expect in terms of additional measures for the government? And if you think that this is going to accelerate the process in 2016, and in particular in the case of Acea, if you have had the chance to discuss a support by your controlling shareholder with the new commissioner, and what you think that would be, let's say, their attitude in terms of what Acea could do in terms of consolidation. A second question is related to the full year expectation by consensus. If I'm right, the EBITDA is expected around 730 million euros. If you can comment if you are comfortable with this, also in consideration of the very strong performance of supply margins, if you expect that there could be some upside on this number. And lastly, on the waste business, you mentioned the completion of the South plant in Orvieto. If you can provide us a guidance on the full year contribution in terms of EBITDA that could be expected from this plant. Thank you.
Okay, about the consolidation, there is nothing new about in terms of the new rules settled in the stability law. Let me make a general consideration on that. It is clear to me that this government is strongly committed to reform and is expected to do what they say. Probably they didn't decide yet to define the measure to force the municipality, or to push. Let me say, to force is maybe too strong. To push and to the municipality that actually at the time being owned the majority of the company all over Italy, and also in the area in which we have interest, as you know, but I'm sure that there will come a time in which the municipality, in which the national government will do what they are saying they will do, and there are measures that could be taken, and of course we are participating to the debate and suggesting also some measures. That could be settled to strongly advise the municipality to go through this process, because the first difficulties it is of course on the side of the municipality that owns the majority of the company, and as you know, we have a few arguments to convince them to lose their control, and we believe that there should be some push on it also from the national government, because it's an issue of a national interest to have a bigger company and more efficient company with less cost for the final customers. But on this, it's more a political issue. Let me say that if there is a consolidation that has no risk of execution, and that is in the field of reasonable feasibility, probably the first is the one on that is related to the Tuscany company, and also because there is a perfectly homogeneity on the political side, and the maximum of interest to and the possibility to be realized. But it's a process that, as you know, did not take place in the country, and what we can do is to reinforce and contribute in any possible way as a company, also by reinforce our position in those areas, and of course we will take any opportunity to reinforce our position also in the next months. About the EBITDA foreseen for the end of the year, let me say the consensus is in the round of 725 million. I am pretty confident that we'll be in that round, and that's because with an EBITDA coming from environment of in the round of 62 million. This year we had, as I said before, we didn't have some tariff adjustment in the water coming from the past, as happened in last year, because we had the review of the tariff and we had the opportunity to discuss with the local authority and to recognize some cost, and even for that, we believe that we can reach the 725 million with the probably net profit in the round of 190 to 200 million by the end of the year. For the net financial position, as Madam Angrisani said, I foresee a net financial position more or less in line with last year, with maybe a slightly increase in the round of 2,100 and something by the end of the year.
I think that...
Did I miss some question?
Yes, there was a question related to the plant in Orvieto.
The plant in Orvieto, but the composting plant starting...
The contribution in terms of EBITDA for next year is in the round of, for next year, not for this, for 2016, of course, because it's just starting. It's in the round of 3.54 million on a year base.
Okay, thank you very much.
The next question is from Stefano Gamberini of Equita SIM. Please go ahead.
Good afternoon. Just a check regarding the water. The tariff increases are in the region of 3% for 2015, if I'm not wrong. I don't know, what is the tariff do you expect for 16? I understand very well that there are a lot of issues regarding the regulation, but just to understand what is the target that you expect to get from the regulation. The second, regarding one-off, are there some one-off also in 2015 regarding both the water and electricity distribution? And then I'm very interested to have some details in terms of EBITDA and also net debt of the companies that are consolidated at equity in the water business. Just if you can give us an idea of what is the EBITDA in the first 9 months of these companies altogether and the net debt of these companies. The very final question regarding the RAB, could you give us an idea of what could be the RAB for 2016 tariffs, if you already calculated it? So what I mean is the calendar RAB at the end of 14.
The calendar RAB at the end of 14.
Yes, the tariff RAB for 16 year for water.
Yes, I start from the last question. This is under discussion because, as you probably know, in the consultation paper, there is foreseen a change of the time lag for RAB, so they could switch to a N-2 years to a N-1. In that case, you should take in account the capex of 2015 also for the tariff 16. So I can give you the figures of 2014 if you want later on. Maybe I start to answer the other question while my colleague will find out the number precise, the figure precise.
Thanks.
But it is relevant if the authority will introduce the change in the time lag for the RAB recognition, of course. For the water tariff increase we expect in the next year, let me first underline that the tariff increase applied to the final customer has increased of 9% this year, but only 3% of that, less than that, had an impact on revenues, because the other part was an increase reserved to recover the adjustment from the previous year, with of course didn't have any impact on revenues. We only made cash from the billing. I cannot say anything about one-off that we expect in water and electricity. Of course, as you know, in our business there are some rules that depends on regulation, and some of the consideration that some consideration will be possible only when the formal tariff will be approved also for 2015, and we are discussing, for instance, the tariff recognized for the enhanced protected market. As you know, is a consultation going on also on that. We asked for some recognition of cost also on that are not included, of course, in the result of the third quarter, but we are discussing. I'm not sure of how will be closed the discussion, of course. About the EBITDA coming from the company, the total amount, let me see, because it should be, no, I'm not sure. That's proportional. That's if we consider as a proportional for considered consolidated line by line, old style before IFRS 10 and 10, at third quarter would be 101 million to be precise.
Okay.
So has increased of more or less 10 million compared to the same period of last year. That was 90 million in the round of 90 million. That's considering proportionally consolidated the company in which we own minority that allowed us to control. The RAB, well, you can refer to the plan, to the business plan, which is for 2014 is in the round of 1,075 million in water and 1,462 million. That is the RAB for 2014. You can add the capex, as I explained to you, for 2015 in order to calculate the impact of the change of the lag of recognition of the RAB if take place. Of course, I don't know if it will take place, but that's what I can say to you. Did I miss something?
No? I think we have answered.
Yes, if you have also the debt, the proportional part of the debt referred to Acea of the company consolidated at the equity level.
Not
okay.
Yet. Okay.
Okay. Thanks.
For any further questions, please press star and 1 on your telephone. There are no more questions registered at this time.
Okay. Thank you to all of you for taking part in the conference call, and the investor relations team is, as usual, available for further information.
Okay, thank you so much to everybody. And
have a nice
have a nice evening, and to the next opportunity to talk to you.
Bye.
Bye.